Hey guys, this is Bruce Marshall from Simpler Trading with the nightly market update and video for Wednesday, October the 10th. And just brutal day. All I can say is wow if you did not see it. Lots of selling today. We went down. This is the open here. This is the close. We went down 94 points. 94.66 points during the day, and after hours it's still going down, and we're down 115 right now as I'm recording this video after the close. So this is the cash session and this is the futures session. So let's back this out, take a look at it, put it in perspective, and kind of see where we are. So this is a 5-day chart. We were at 2940 last Wednesday. This is Wednesday session. This is Thursday, Friday. See down here. So it's only been 1 week, and we're down 100. What's that? 156 points. Is that right? Yeah, 156 points. That is a lot in a very short period of time. Normally our expected move is more in the range of, say, on a weekly basis, 45 points, something like that. So we're really trucking to the downside. Let's go to a 10-day, and if you remember, let's go to a 20-day. If you remember, if you watched my video I did last Wednesday, I was talking about this. This is the 2940 level. This was the new all-time high, and we were on a roll, and I thought we kind of approached it there, almost got there, touched it again there, but never could get through it. And once we failed, basically at this level, we've just been rolling over ever since, right? Way down here. Again, let's put this on a larger time frame, out to a 1-year chart. Look at that. That is amazing, and not in a good way, right? So again, if you remember from last week, what I talked about in my video last Wednesday night, I said we had gotten extended up here, and I drew this line. I said this is a double top, 2940 there, 2940 there. That's a double top. I said I would expect that we would pull back to the 20-day here or the 50-day here, and I said this is going to be something that is very healthy for the market. It's just another in the long line of pullbacks to give us a little work off a little energy to then bounce to the upside. And I said I don't think this is likely. I was dead on right here. But I was wrong here. Because we are headed, I can draw an arrow in there. We are headed straight down to that area. That's a 200-day moving average right here. And if we look, this is even worse. Look at the NASDAQ. Bam, all the way down, touched the 200-day moving average today. And the other one we talked about last week, just in comparing the indexes, this is the RUT, the Russell 2000. We came down, touched it, and it has held almost every time. We went through it momentarily here, but we blasted through it here today. I was talking last week about buying. I said I'd rather be a buyer of the Russell versus the S&P last week, because I thought that 200-day would hold. Obviously it didn't. Nothing is held. I don't think we would have gotten this much downside if the NASDAQ and the S&P had not just fallen off a cliff, But if we go back out here a little bit further in time, now this, once you go out in further time there, this is a 50-day on a 3-year weekly chart, not a daily chart. And you can see every time we touch it, we bounce here. This we didn't. There was other things going on back here, but we've broken through it here, so that's not a good sign. I still would rather be a buyer here than a seller, but I wouldn't be a buyer tomorrow. So let me switch back to the S&P. I think we flushed down. I think we hit this 200-day. There's 2750. We may go there. I'm still, this has been very fast. From point A to point B, that's 5 days. That's a lot. Typically it takes longer to work your way down and then to kind of work your way back up, right? What we're seeing here is this kind of vertical, boom, boom, and this and this. I am also inclined to think there is more to this. Obviously you don't get retail selling like this. I think something else happened out there. I think a fund blew up, or there was a fund that had a huge liquidation problem, and the way that works is, a fund or anybody that has a, big multi-billion dollar portfolio, if they have losses, need to cover them. What do they sell first? Well, your most liquid names, out there, Amazon, Google, Apple, that kind of stuff, Boeing, which have been the key leaders. But if you got to get out something quick in very large size, you're going to sell the liquid names first. I think that seems like what's going on here. This is very, 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 very abnormal that you get the one day. Look at the past year. The only other time we've gotten this much selling in one day is right there. That's the only day, and right there actually, in a year. That's not as much, and this is 2 days. That's 1 day, and this is 1 day, and it's not as much as this. It's crazy. I'm scratching my head going, there's something else behind this. The reason all this started was interest rates ticked up a little bit. But we've got to remember the last time we were in a long, rate increasing environment, stocks are going up the whole time. So that's not, to me, is not a reason for this thing to blow up, right? Also, we've got earnings coming up in about a week, and starting, the big ones going to start in a week. Corporate earnings are set to grow at about almost 20% year over year for the third quarter. That's going to be the third highest quarterly earnings growth rate since 2011. So earnings are going to come in, strong this quarter. And does that mean, that we can't still keep going down? No, it does not mean that, but it does mean that I think we should find a foothold down here somewhere and start going higher. As we start getting earnings in, and that will be again in the next 3 weeks. We'll have, again, Apple and on and on and on, all the big names. Just go down the list. So, what do I make of this? I don't know. I do know that over the last 5 days I have been lightening up, and I cleared, basically all the risk off the downside. But I am going to be a very selective and very cautious buyer here. There's a lot of things that have come down way down in price. I'm going to be looking at the financials. I'm looking at Citigroup, Goldman Sachs, JP Morgan, Morgan Stanley, etc. Or if you want to do it the easy way or easier way, probably less risk as well, the XLF, just buy the financial sector. Interest rates going up, financials going to benefit. The financials, of course, get sold with the market, but they will be the ones with strong earnings, etc. I'm also, getting more interested in, again, the key names, the Apples, Amazons, the Boeings, the ones that have been holding up so well, and the leaders of the pack, right? So focus on those names. But again, I will start nibbling tomorrow, depending on what happens. On some of these names. I wish I had specific names, but I gave you some examples. I'll probably buy some Citigroup, probably buy some IWM, probably buy some CSX, the railroad, and I'll probably buy some XLF I've got it here on the screen. But I'm going to nibble. I'm going to be careful. Tomorrow may not be the day. Maybe Friday, maybe Monday or Tuesday next week. But I'm going to be cautious and be ready to buy when the clouds start to clear. And don't go all in gung-ho, buying over a period of time if the market starts to firm up and look a little bit better. Right now we just need to be in caution mode, defensive mode, and hurry up and wait mode. There's no reason to jump in here too soon, because what is likely to happen, what is very possible, is that we get a bounce and then a fade. A bounce and a fade, and this might turn into something going like this, kind of like this did. This is more vertical, but you get the point. So just be careful. Be careful out here. But again, I don't think this is the end of the world. I think earnings are going to be, going to kind of set the tone in another couple of weeks. So be careful, be cautious, and good luck in your trading. If you don't have to do anything, don't do anything. But wait and watch. Don't try to hedge here either. It's too expensive. I'd rather go to cash and just wait than try to buy super expensive hedging, because volatility has spiked up so much. Everything to hedge here at this point, it's over. I mean, you missed it. If you didn't hedge before, you missed it. So don't try to do that. So anyway, I hope this helps. A little bit longer than normal, but a lot going on today. So be careful out there, and be selective and try to catch this next move up. And I will see you guys next Wednesday. So thanks for the time. Appreciate it. Talk to you later.
Hey everybody, this is John. So obviously I had a lot of questions today on the market action. And I want to point out something here. You can see how we chewed on these daily Bollinger Bands for a couple of days. All right. Here we chewed on them. We didn't get the spike up in the VIX, and we're able to bounce back up. Here we chewed on them, we got the spike up in the VIX, and then we puked. And so the question is then what happens next? What's the next line in the sand? That's when you go to the weekly. All right, so you can see at this point, from the weekly perspective, everything's still okay. All right, usually what will happen is that the S&Ps, if they're going to kind of revert back to the mean, they stop at that weekly kind of a pivot. All right, you can see it's an ascending trend here, right? So if you look at the Bollinger Bands here, we did come down here, we spiked through it, but the Bollinger Band, the lower one here, still continued along. It kind of scrunched up here, we got a squeeze, then it expanded. But the idea here is that, and then when we came right here, you can see we actually still, the Bollinger Band continued to slant upwards, okay? So in terms of the S&Ps, the Bollinger Bands on the weekly continue to slant upwards, all right? So the question is how do we see all this? How do we take advantage of it? How do we know what to do? So this is where I find that these levels come in extremely handy. Okay, so what I did on this chart, it's a little scrunched up because I wanted to show all of the bigger levels that I like to look at here. So on something like this, actually I'm just going to switch this to a daily chart. All right, because I'm not interested in the 30-minute or the 60-minute here. I'm actually interested in the big kahuna bands, okay? And typically what's going to happen on something like this is in a normal market, i.e. the range on the S&Ps is less than 1% in terms of a net change, then typically when you come up into the upper bands, like on the 2-day, you're then going to come back to the daily and the 2-day pivot, and that's normal, all right? When you start to see some selling and some crash kind of days, then what happens is it opens up the door to the 3-day, 4-day, and weekly lower Bollinger Bands. And you can see today we dropped right to the 3-day. All right, and you want to know where these are because this is where the institutions also trigger kind of their panic liquidation orders and sell orders as well. You can see when we look at the NASDAQ here, we have actually blew through all of these levels today, but we did come down to that weekly lower, and we're trying to gain some footing here, okay? So what happens again on this is that when you start seeing that the futures are down over 1%, okay, again, up here is perfect topping levels. Like we're rallying and we're getting distribution days here. We're right into the upper bands. At the very least, we're looking for a pullback into those mid-levels, right? But then once the selling accelerates, once you see those conviction days and we start taking this out and you start to get one of those panic days, they typically will stop at the 4-day and the weekly lower Bollinger Bands. All right, so that's where we are right now. Now, if you want to see to the extent how a stock is doing versus the market, if we bring up Boeing here, you can see Boeing is holding up really well. Yes, we came up into these upper pivots here. We know that there's likely to be a pullback, and guess what? We've pulled back normally, okay, to the daily pivot. We're not even down in here. So this is, if we see the markets are going to turn around, this is one of the first stocks I'd want to look at. And this is unfortunately a little scrunched up, but I want to show you kind of how these, so I just showed you the bigger levels to look at. So then the lower levels to look at, I'm always looking at, in this case, you got the 2-hour upper, 2-hour pivot, and then the 2-hour lower. So if Boeing can recapture the 2-hour lower, then we look for a quick move back up to 384 tomorrow. You can see we do have buy levels, confirmed buy zones that are here towards the end of the day. And I'll want to look at those again tomorrow morning. And then, of course, how I use these in conjunction with some of the other tools. These are those new kind of dynamic level indicators we're looking at. I also want to look and say, okay, do we have some top hats in place? You know, how are we looking on the multi-EMA cross? How are we looking on squeezes? And we can just tie all of this together. So this is the class I'm going to be teaching on Saturday. I wanted to show you a couple of cool things real quick and also show you a way to get this class for free. Which is kind of interesting. So if you go to simplertrading.com/method, that'll take you to this page. And this is how it works. For this pro version, which is right now just $9.97, as always, after the class starts, then this starts on October 13th, and once it gets into our store, the price goes up. So what this includes is a 4-hour strategy class, 3 live trading days, and then these 2 indicators that I've been talking about, both for short-term ebbs and flows, like on a day when the market is trading less than 1%, then you set it up and use the 30, the 60, the 120, and the 240s. I'll show you all this on Saturday. You just, boom, catch those ebbs and flows. And then on these bigger days like this, you actually set up your longer-term chart so you can actually see those levels coming into play. I'm finding this indispensable for a couple of different reasons, but the volatility that we're seeing right now is a perfect example of this. Now, if you are newer to Simpler and newer to options and you're like, you know what, that's great, I don't even know if I could handle this, what I would recommend is that you actually sign up for a quick start $97 class. And what this is again, and this will be tomorrow night. If you can't attend tomorrow night, it will be recorded. But it's if you're new to Simpler or you're new to options, I'm going to walk you through all new examples of, hey, these are my favorite basic setups. These are basic option strategies that I like. At the end of this, you will have tools and setups that you can use without having to buy any indicators or anything like that, that you can actually go out and start using the next day. Okay, so at the very least, I would suggest that because it will give you a leg up on the markets. From there, you can still decide if you want to do this. Okay, and then the elite version is just if you like live events. This includes a live workshop at the end of October in San Francisco, and also you and I can do a breakout session while we're there. So one thing a lot of times people don't know is they ask is like, hey, I love the class and the indicators, could I get it for free somehow? And you actually can. So our friends over at TradeStation will reimburse the entire cost of this class through discount and commissions. And if you don't have TradeStation, you just open up an account with them, you're good to go. And if you do have a TradeStation, all you have to do is actually just open up another account, like an IRA or something like that. And you can contact Kelly directly, and that's her email, and she can help you with that and get you set up. All right, it's a really good deal. I like TradeStation. It's one of the charting platforms I use all the time in addition to Thinkorswim. And for those of you that have never tried it, it's just kind of a good way to try out TradeStation and get our class for free. All right, so that's what we got. Real quick again, simplertrading.com/method. And then from there, the class dates and everything, we're going to have the quick start one is going to be Thursday from 5 to 7 Central Time. Again, if you can't make it live, that's fine. We'll record it. The pro version starts Saturday, the 13th, from 11 a.m. to about 4 p.m., give or take. And then, of course, there's 3 live trading days, and that'll be on the 16th through the 18th the following week. And then you get each of these indicators, which in and of themselves have been amazing. All right, so anyway, just want to let you guys know about that. Looking forward to working with you, and have a great rest of your evening.